Market back in positive territory. Turnover also coming to the party. Your thoughts on trade today?
I think it was a relatively good day, especially compared with yesterday's slight decline. And I think based on the results that have come out so far, they could actually set the foundations in terms of where the market is going to go. And I think we are likely to see an upward trend, possibly not very, very significant, but a gradual upward trend, just like the way the market has been performing in the last 1 month or so.
You talk about results. Safaricom out with results today. That stock ending up 3% in the session. What did you make of those results? Did they meet your expectations?
I would say Safaricom actually, I would actually look at it in terms of beating most analysts' expectations, especially when you consider the very difficult operating environment that prevailed for the greater part of last year, resulting mainly in depreciation of the shilling and also a very sharp spike in interest rates. And I think that's where they really got a big hit. So I think when you look at it relative to the price wars that also were playing out at the same time, in the middle of all that storm, the fact that they were actually able to grow their top line, and in as much as earnings declined, a 4% decline was it was actually lower than expected. And I think the results were generally very, very impressive.
Very impressive results, like you say, but where to from here for Safaricom, particularly when you look at the stock sitting at 345 in today's trading session?
I think looking forward, the question I think we really need to be asking ourselves is how the macroeconomic environment is going to fare out for the remaining part of their financial year. And looking at short-term interest rates, which is one of the areas they got a big hit, we actually expect treasury bill rates to dip below 10% range. We could possibly even see that happening this month, which would significantly reduce their borrowing costs. Again, we've seen a lot of stability as far as the shilling exchange rate is concerned. And I think moving forward, we should also expect that to continue on the back of heavy inflows from remittances, export flows, and so on. So we think the shilling is likely to remain strong, at least not weaken to levels experienced last year. And we put all these factors together with expected growth in their data, which still has a lot of potential. We expect the price. We think currently it's actually undervalued if you look at forward earnings.
Looking at Diamond Trust Bank, also out with results today, a pre-tax profit rising by 54%. That stock ended flat in the session. Would you say that these results were already priced in?
By and large, I think the market had expected that. And I think if you look at the interest rates environment, it was actually reflecting very, very clearly in their financials. Interest income doubling during the period. Unfortunately, interest expense tripled also during the period. And that, I think, also slowed down the profits that would have probably expected them to make. So in as much as the earnings went up by 54%, I think they would have done much, much better had there not been a lot of volatility as far as interest rates are concerned. So I think moving forward, again, if we see interest rates coming down, they probably might be compelled, or they might be enabled to increase their loan book. And I think a low interest rate environment might probably even be more conducive for them in terms of their cost of funds, and that should enable them increase their earnings growth moving forward. Plus, of course, there's the issue of the rights issue, and I think that should enable them to expand even further than where they are reaching currently.
You've highlighted a number of challenges for the bank. What should investors be doing with the stock currently? Hold or sell?
I would look at Diamond Trust as a growth stock. I think they are nowhere near exhausting the potential that they have. So definitely look at it as a buy or hold for that matter.
Looking at the short-term interest rates this week, falling back for the 182-day Treasury bill, falling back to about 13.07%. What impact do you see this fall in these short-term interest rates having on equity markets and bond markets going forward?
Well, first of all, I think it's a very encouraging trend because by and large, the high interest rates were hurting, majority of players in the economy, as you've seen in the performance of the non-financials. So I think, but we generally expect that once the psychological level of 10% is breached, and we see treasury bill rates dropping below 10%, we expect to see a lot of action as far as equities are concerned, and for various reasons. And perhaps key of them is when you look at the alternatives that most investors would have as far as dividend yields are concerned. Stocks, I think, at current valuations, in addition to the dividend yields that are expected, should definitely look more promising going forward, and bonds as well, because of the anticipation in capital gains. So I suspect there's going to be a lot of activity as interest rates, short-term rates continue trending downwards.